I am Karan Singh Chabra, and today I have got an opportunity to present my views in favor of the motion for the given topic to be or not to be an auditor in the company. I'll start with the introduction. First of all, we all should know what do we mean by this topic which we have been given with. To be or not to be an auditor in the company. To be or not to be is a very famous phrase which was taken as the opening phrase in the nunnery scene of William Shakespeare's famous play Hamlet. These days, Indian people know this play by the name of Heather. This quote is quite interesting because as the starting line of the poem, it examines the question of suicide as a logical question. It is basically saying whether to live or not to live is to be performed. Although in the given topic for debate, the things are not that severe or relating to life and death, but yes, certainly a point to ponder upon and think. Companies Act 2013, pleasures. This topic is most of the time dealt as Companies Act 2013, pleasures and pains. But yes, so just for the time being, we can forget about the pains and focus only on the pleasures that we have got out of this Companies Act. Beginning with, it is a lot simpler with a greater clarity and purpose when compared to its initial counterpart of Companies Act 1956. It has roughly replaced 700 conflicting clauses with 470 clauses, and that too only in 309 pages. One of the important clauses it mentions is of independent directors, which says 1/3 of their board directors should be independent, tenure is limited to 2 terms of 5 years each, and independent directors are allowed to hold a maximum period of 20 companies, which was earlier restricted only to 15 companies. Corporate social responsibilities, CSR, a lot has been talked about it in the past and a lot has been talking about it since its notification. And it says a company has to earmark the fund, form a committee and formulate a CSR policy and spend in cash. If not, the reason has to be disclosed in the financials. As per the study conducted by Business Standards in January, it was found out that out of the 500 companies in Bombay Stock Exchange, nearly 457 companies will have to spend approx rupees 6,751 crores on account of CSR. Certainly not a small amount. Then we have the clause for women directors. It says at least one woman director should be on board. And as per GMI ratings, women account only for 11% of the total directorships in the world's best known companies. And for India, a sample of 89 companies with a market valuation of more than $1 billion was taken, which had only 7% of the women directors. I repeat, which had only 7% of the women directors. Indeed, a great step taken towards gender equality in the top hierarchy. Class action suits, for me, perhaps it has been one of the best provisions in the new act. During the Satyam scam in 2008, Indian shareholders were left twiddling their thumbs while foreign shareholders were paid off only because they had class action suits in their country and we did not. But with coming in of Companies Act 2013, my dear shareholders, just relax, chill and invest. No worries now on. Rotation of auditors, one of the very vibrant clauses introduced by the Companies Act, and a lot has been debated about it, and certainly a thing which auditors should pay a special attention towards. It says, earlier there was no such any clause in the Companies Act 1956, but now it says a maximum time period allowed for an individual auditor is 5 years, and after its expiry, he has to be replaced by an auditor. But in case of a partnership firm, this rotation policy is being extended to 2 terms of 5 years each, which brings it to a total of 10 years. And then a cooling off period has to be there for 5 years, and then again you can be appointed for the audit. A 3-year transitional time is being given to abide by the provisions of this act. Magodi opponents are shouting from the rooftop that the company audit should not be accepted. They have got all the reasons, they have got all the valid points to talk about it. Agreed. Fine. One of my special guests I have got for you, it also has the same doubt as you people have. So let's introduce my special guest onto the screen. It says, do you know why a company needs an auditor? And unfortunately, the guest is also quite unknown about this fact. So friends, kindly allow me to enlighten my worthy opponents and also my dear and special guest which I have for you by beginning with basic rationale, increased responsibilities, no escapism, revised relationship of an auditor and a company, to read between the lines of these clauses. Confused? Okay. Let me take it point by point and step by step. How do I need to go about it? First, what is the basic rationale that I am putting forward and standing my ground that audit of the companies should be accepted? First of all, for me, it is more of a social responsibility than just to earn the bread and butter for a livelihood, because a shareholder puts his trust and faith in the auditor for his money invested. This trust, for me, has much more significance than the dollars or the rupees which you earn by doing an audit. Second point, which I would certainly like to raise is, why have you done a chartered accountancy course, of rigorous course of 4 years? For me, it is like a doctor is saying that I don't want to cure and I don't want to operate my patients. You are a chartered accountant, a qualified chartered accountant, and you don't wish to do an audit of the company because maybe filing of tax returns would excite you more than doing an audit. Then I have increased responsibilities. CA 2013 has brought a lot of challenging avenues for the auditors to confront. So following are the new and revised provisions, the compliance for which has to be ensured by the auditor. These are certain new aspects which were earlier missing in the Companies Act 1956, which have only emerged in 2013 and which auditors certainly need to pay a special focus on. Its first is CSR committee. The checking point for an auditor is that the company meeting certain conditions that should constitute a CSR committee consisting of minimum of 3 directors. Then the CSR committee should consist of minimum of 1 independent director. Friend, I just want to put in the focus on that these are the few things which has increased our responsibilities, and we need to shoulder these responsibilities in order to take the clients and the shareholders out of this kind of threat surrounding around this Companies Act 2013. Stakeholder Relationship Committee. This is a kind of new committee which has been coming. It says a company with more than 1,000 shareholders, debenture holders, deposit holders, and other security holders shall constitute this committee. And it does not prescribe any number of members of such committee, but yes, it certainly mentions that a non-executive director should be the chairman of this committee. Then resident directors. A company ought to have at least one of its directors as a resident director. Now, company must assess and frame a policy which should keep a rigorous check that at least one of its directors fulfills the condition of being present in India for 182 days to be considered as a resident director. It is pretty much similar in line with the Income Tax Act. Related party transactions. 1956 Act defined the term relative. Relative transactions or relative party was nowhere mentioned. So this is for the first time that CA 2013 has come up with a definition for related party. The 2013 Act proposes that all related party transactions which are not in the ordinary course of business or not at arm's length business basis should be approved by the board. It asks for a special approval to be raised in case of those transactions which are not at arm's length. Number of directorships, as discussed earlier, it has been increased from 15 companies to 20 companies. Excuse me. No escapism. Having said that, all these responsibilities have increased and there is a lot of provisions and compliances to be followed, and my worthy opponents are making a lot of hue and cry that one should not be an auditor of the company. All the points are taken. So I would like to ask my dear friends, do you mean that Chartered Accountants of India, one of the finest professionals which the world admire, by not accepting these challenging avenues, should we run away from it? Should we escape away from it? The answer from me is a very big no. We should not do that. And above all, let's leave aside this gutsy aspect of just having the guts and all. I would like to ask, have our professional ethics and moral values have gone for a toss or have gone for a winter vacation or what? Would they ever allow and permit us to do this just because a task is daunting? We are not supposed to do it? Their nodding heads have given me my reply. With the New Companies Act 2013 already knocked our door, or rather to say, not just knocked, it has entered with a big bang. Not to accept the audit of a company, it's itself sounding ridiculous to me. Then I have this topic of revised relationship of a company with its auditors. With the coming in of 2013 Act, the rules of the games have changed a bit. So better we kit up and be prepared for it. There are certain powers and rights which the auditor have already been conferred with, and at the same time it brings in the duties and responsibilities with it. So apart from discussing on the nitty-gritties of this aspect, we should also know some basic aspects about the powers and rights of the auditor. As per section 443, subsection 1, the auditor can access to the book of accounts at all the times and seek such information from the management. The auditor can make inquiries regarding affairs of the company, and if he is satisfied it is not necessary to disclose this fact in his report. However, on inquiry, if he finds some adverse features, he must report the same. But remember, talking about the powers and rights, and our Uncle Ben has rightly said to us Spider-Man that with great power comes a great responsibility. So having enjoyed all the powers and rights conferred on us, it's time to be pulling up our socks and get ready for the duties and responsibilities. So there are certain areas wherein the responsibility of an auditor holds significance. They are: the first is loans and advance, the second is sale of investments, third comes loans and advances to be shown as deposits, which are shown as deposits, and allotment of shares for cash. These are the few main areas where the auditor needs to put his special focus. In case of loans and advances, he needs to check whether loans are properly secured, whether the terms of the loans are not prejudicial to the interest of the company or its members, valuation of securities to see whether the loans is fully secured or partly, whether investments have been sold at a price lesser than that at which they were purchased by the company. Inquire about all the deposits shown by the company and be satisfied that none of the loans and advances are shown as deposits. Fair enough, nothing to be worried about in this case. Allotment of shares for cash, whether cash has actually been received, and if not, the position as stated in the account books and balance sheet is correct, regular, and not misleading. Now, a crucial aspect of this presentation, we have had a plethora of clauses coming in with this Companies Act, and most of the provisions, to my dismay and to all our dismays from the CA fraternity, have not been towards the favor of these auditors, but surely we have to see some silver lining in these provisions. And before I get on with this topic, I would like to share a small incident with you, which I also narrated in my presentation. It says, when the draft rules relating to Companies Act 2013 were first rolled out, my senior audit friends were shell-shocked. I was surprised, being a first-year article trainee. I was shell-shocked that what has gone wrong with my audit friends, because except for the year-end audits, we are much relaxed and chilled out compared to our counterparts in the tax practice, which are constantly battling around the tax tribunals and different courts. So I tried to figure out what is the reason for the dismay, and to my surprise, I got plenty number of answers ranging from rotation of auditors, cap on the maximum number of audits, penal provisions, and a lot more. My very worthy opponents would be having a whole lot of list for it. I don't think they should have any problem in sharing that with you guys. So you can get to know that there are a lot of provisions going against the auditors. So, as I said before, we certainly have to see a silver lining out of these provisions. So I'll take it one by one. A clause of rotation of auditors, as discussed earlier, could be the biggest weapon in the armor of my worthy opponents and has been a talking point of everyone since its notification. It says certain classes of company need to have their auditors regulated after every 5 years in case of individuals and after expiry of 2 terms of 5 years in case of partnership firm, as I just discussed before. But the silver lining to this clause comes here. The basic purpose well justifies the significance of it. The basic purpose behind having this rotation was auditors are being continued in the same firm for 24 years, 26 years, 40 years. So there are all chances that the auditor may collude with the management and may not be in a position to express his true and fair view on the financial statements. So that to me is extremely fair point, and the period of 5 years is extremely justified that after a period of 5 years this should be changed. I don't see anything wrong in this provision. Second point, the silver line or the good which I can find out is it will give chance to our new auditors, to our newbies. Now no more would be the scenario that the same auditor did the accounts of the grandpa and then 50 years down the line the same auditor is doing the accounts and verifying the accounts of his grandson. A press release from the Institute of Chartered Accountants of India quotes our president, a very known president, C.A. K. Raghu sir, as saying, rotation of auditors which has not been accepted across the world, a known fact, is now only restricted to certain classes of companies, leaving close to 90% of the companies outside the scope of rotation. This will benefit small and medium practitioners, which means auditors and corporates are relatively, they are being relaxed. So when, I just have one point to make out of this press release which I have mentioned here, when our own president sir is setting up a great example by seeing the silver line in this provision and asking us to follow his footsteps, but no, here we are, here our worthy opponents are, who have just refused to accept it, and they are here to make their own footprints and own footmarks. Right? Also, let me bring in a new point on this when we talk about rotation of auditors. Let me bring into this picture that rotation is nothing new to India. We have been facing this rotation in different industries such as SBI, insurance companies and other banks also have this practice of rotation, and I don't find any issues in the quality of audit being performed there. But we don't ask even a single question when it comes to auditors of these organizations. It's perfectly fine. So, next clause that comes is cap on the maximum number of audits which we can do. Earlier it was 30, but now it has been dropped down to 20, which has been a debatable point in the past as well, because the quality of the audit, whether we accept it or not, has to be compromised at times in order to do many audits. So by bringing in this clause, certainly the quality of the audit work which we give to those 20 companies, to those 20 organizations would be impeccable and incomparable for me. That is what I feel. Then we have a clause on reporting of fraud. It says auditor shall report the matter to the central government immediately, but not later than 60 days of his knowledge of any kind of fraud. And as soon as government comes into picture, any citizen, let alone the auditors, becomes thrilled and shell-shocked. Same is the case with the silver lining thing which I told, need to submit his report directly to the central government. But he need not submit it directly to the central government, he can submit it to the board of directors within 45 days, and within the next 15 days he has to give it to the central government. Due to exigency of time, I need to just skip through a bit of topics which I can certainly cut short during my final presentation. So I'll straightly I'll jump to the conclusion part of it. Conclusion. At last but not the least, I would like to reiterate that there is no denying the fact that the task ahead is not a cakewalk, but at the same time, this is the time to pull up our socks and show our mettle and live up to the expectations of million people who have a lot of expectation from our noble profession of chartered accountancy. Face the heat, accept the audits, do the audit of a company. At last, something for my dear article friends. Press on the accelerator now and learn as much as you can. With this, I would like to end with a quote said by Richard Mapkinko for you guys. The more you sweat in training, the less you bleed in combat. At last, proud to be a part of this dynamic fraternity and look forward to serve the nation after passing my May 2016 CA final exams. Jai Hind, Jai Bharat, and fingers crossed. Thank you.